All right, so I am working on taking entries using trend lines, and right now I'm on gold on the 1 hour. I will predominantly be using the trend line on the 15-minute time frame. We are currently in a demand zone. Current market is in a demand zone based on this last breakout finder. And even though this is the last selling candle, because of all of this consolidation, I decided to go with this selling candle to include the wicks, just to get a better entry. On the 1 hour time frame, as you can see, the market has created like a consolidation zone right here and has been trading between this sell and buy zone for the last few days or week. And so right now we're back down at this demand zone, and I am drawing a 15-minute trend line going back into history based off this push down. And so ideally, had this all of this to the right had not happened, my question to myself would have been how would I have drawn my trend line in this case? Well, it's always good to make sure you have a good pullback to attach the trend line. So I could have did something like this initially, waited for the market to break and close above the trend line. For the retest, I'm looking to move to the 1 hour using my signal counter strategy. Here's the swing low. This is the signal candle. So my retest that aligns with this trend line would have been right here. So signal candle break retest. So let's go to the 15-minute time frame and let's see how this would have played out. See, at this point, the trend line has not been broken, but right here it would have broke, and then for the retest, we wouldn't have gotten it until about right here. And so at that point, the market did move up, excuse me. So I'm gonna mark that this would have been the entry for the retest. And when you go back to the 1 hour, in comparison to that, that would have been the pullback from this leg up. And the reason why I know this is you measure from swing high to swing low. This came back to the 618. Perfect entry to move this market up. So this is why using fibs is extremely important when, especially you start to get your pullback after the impulse leg. That's when you want to start using your fibs. And so once the market started making lower lows, that's when you can use your fibs to measure how far you think it's going to go back before it turns around. And so once it got to the 618 zone, that's confirmation to go ahead and enter. Another confirmation will be where's the gap, which this was an imbalance that needed to be filled. So I knew the market was coming here to fill this imbalance before pushing up. So as soon as the market got into this area, I could have market execute for the buy up and TP here. Now, another situation moving the market forward for a trend line entry would have been this outer trend line on the 15-minute time frame as well. So in this situation, we still are using this zone right here, even though market has already broke above this trend line. I could have easily waited till the market came back to that trend line. So in this case, this would have been my area where it came back into the trend line, waited for inverted pattern to indicate that the market is ready to reverse. So you have a inverted head and shoulder pattern right here, and then the market pushed up, breaking above this trend line. That could have been confirmation that the market is ready to buy up again. More to follow on trend lines. I am going to work on back testing. Also, once again, signal candle strategy does work with this. This is my swing low. This is my signal candle. This is where the candle that broke above this trend line. This was my retest for the entry. Take the buy up. And market went back to this green zone again. Another way, awesome way to trade with the trend line. More to follow on trend lines.